Okay, Sunday, November 6, 2016. We're going to look at indexes from North America here. This is Canada Venture Exchange Composite. I would look at this as kind of your over-the-counter type stocks. It has moved. This is a weekly chart here. It has from the high commodity secular commodity high in 2011, basically the rundown until the beginning of the year, and the bounce in commodities. Moving averages, you know, I just use them as a lazy way of drawing in a trend line. It's a figment of your imagination. Red line doesn't mean, well, I guess it did, right? That's fine. That's why I keep saying technical analysis, and computers make things just a little bit easier here these days. Everything is pretty finite. Okay, Canadian, then we're going to go into the NASDAQ composite here. Okay, once again, a weekly chart, 2011 down here, all the way up. Basically a larger sideways pattern for some time now. Entering its third year type of deal. All right, basically you have a sideways pattern. It's either going to be distribution or a pause if it goes higher. Basically digesting all of this. It needs to be on its own, as they say. The NASDAQ was the strongest, breaking out to new highs of all the indexes, and the rest failed. To follow through on their highs. Basically a jab is how I look at it for the NASDAQ. Jabbed higher, came back in the sideways range. In theory, if it fails to hold the breakout, usually blasts through the other side, which I would now look at a 200 weekly as the target, which is close to the S1, which is close to down here. You can draw a trend line here, and when these two meet, if they meet at all. My bias is still down. I wrote earlier today about the minor extreme position and minor extreme calf, not major minor, reading in the put call ratio. So just a little heads up on that one there. Let's see, NASDAQ composite. All right, down here I have the stochastics and the MACD, and you can see some divergence down here on the stochastics. And this is just basically, I mean, even if you look at a larger cycle on here, okay, with these indicators, you basically, the MACD, okay, where are we here? You had your run up, okay. They all group together. That's what I'm looking for when I kind of overlap these things, is that they group together. Basically had a couple of times off the low down here that it continued, that it bounced and continued higher. All right, the NASDAQ. So you have your stochastics, that's quick, your MACD that takes a little bit longer. The only time I like these two indicators, unless I'm playing stochastics short term, like RSI, is if the two overlap each other. The MACD is a trailing, lagging, kind of a deeper lagger here, because your basic 12, 26, 9 setup is on a weekly, but that allows you to stay in the trend longer, okay, because it didn't jam up until this area basically went sideways for months, okay. So same thing, continuation. They never did reset except for down in here in 16. We did have a reset. So you had basically a decent move down here. This didn't influence me to buy in late winter at all. Like I said, I don't follow these unless these two are overlapped together. It's a lagging deal. I do like the setup though, is if you have patience, and it's like everything else. You can hold a loser for 3 weeks and you hold a winner for 30 minutes. You know, all you have to do is tell yourself, take a look at the daily. Is it still holding? If you buy the low of the day, we'll just say that's your stop. Put it in mentally, whatever. That's the whole key to all of this. You want to trade a lot, put in some stops. Oh man, I wish I had more money to trade. Yeah, well, guess what? Just there's nothing. You put in the stops. We all know, you know, sometimes you get picked off, sometimes you don't, whatever. Think about it that way too. If you do get picked off, when you have to go back and take it back, it's not much, right? Try and take 300-400 pips out of something, right? Oh yeah, you know, that's a lot of ticks there. Okay, and it happens to all of us. You know, the whole, it's real simple. Figure out what your flaws are and focus on that. If you can't tell yourself, if the stock market can go down 9 days, I dare you to hold a winner for 9 days. That's like 2 weeks. Look at the moving average. Oh, there it is. That would have been a buy. This probably would have been the second one. Fourth one. That would have been the signal for me on moving averages. Usually when it hits 3 times, you buy. You support it. You come in and support it. That's how I kind of look at that for moving averages. But getting back, 200 weekly moving average, target S1, continuation below Friday's low. Okay, I'm going to say that we're going to trade up, a bias towards up, either sideways or up. If we do get follow through, our ranges are going to widen something fierce. So I talked about earlier, 4-point S&P. It's the same thing. You put in a 4-point stop if you're long, sell 2 contracts, right? So you immediately go from long to short. Okay, so I mean, remember, it's fluid. If I want to sell something, I also want to short it. That's how I look at it. Would I short it here? Well, you know, so now you're fighting yourself. That would be mental masturbation. Fighting yourself. If I should get out of my long and then try to sell my short higher up, you know, no. If you do one, you do the other, back and forth, back, just like an assembly line. All right. So I'm looking for some sort of bounce here. It'd be logical, one, deer in the headlights. A lot of emails I get from people say that I'm going to wait until after the election to react. I'm going, okay, this is what I'd like to see. In my ultimate dreams of being a bear-bared bear, I'd like to see a move up, even swipe the high, and then come running back down. We've had some pretty good bars here, right? On a weekly basis. Open up at the highs and close at the lows. Open up at the highs and close at the lows. Open up at the highs and close at the lows. Open up at the low, you know, 4, 8, 12 points lower this morning. What's this moving average line? 49.29 on the composite. This is the cash, but it just gives you a reference of where we are distance-wise to the futures. And I'd like indiscriminate line, especially now. It works well if I don't have a ruler. But I would like to see some sort of up move Sunday, Monday, Tuesday, that kind of Wednesday, just zaniness, and then just go, oh, okay, we know who's buying today. Just have to put your little feeler. It'd be like, what do they call those things? Shad? Yeah, boil? Yeah, boil of shad or some smelt? Well, that's a different story. All right, but on the downside here, or at least it's a longer sideways pattern, but we did poke over the top on the NASDAQ composite, coming back in, so it's susceptible of blowing out the bottom. The horizontal here, I have pivots. These basically overlap 2016 and 2017. So I said out of a sideways, we're going to get a breakout. We're either going to go and hit R1 and R2, that kind of deal, or S1 or S2. Here's S1, the next level, give it a shot below today's lows. This is nice because it is cash. So it won't, if we do have some whipsaw on the open this morning, you know, you can wait till morning to figure out what you want to do. Like I said, right now I like the short side, so any opportunities that way short side, but I'd like to hedge spreads or options overnight kind of thing. You're just fine tuning your position too. So that's on the NASDAQ. Here is the Dow Jones Industrial Composite. So this is the 65. It's a weekly chart. Okay, price weighted. Okay, instead of market cap. Heck of a pause, came down from the 200-week moving average, and here we are. I'm not a big fan of these indexes, but I just look at it anyway for the Dow theory on here. I have to just rule this as a double top for now, and then it's basically at best stuck in a range. It is somewhat pausing below what would be a breakout area, but like I told you before, I don't know why Nike is in the Dow. Explain to me that. Besides that, Home Depot had carpet padding made out of Nikes. Just, I'm like, okay, am I supposed to be thrilled that it's underneath my carpet? So we got flooring instead. All right, so, the fumes, Kevin, the fumes. All right, I'm not a big fan of this, but I'll just look at it anyway, because what do we have? We have the Dow Industrials that would have to lead higher. The utilities that are looking for a bear flag, and the transports, well, we'll take a look at that in a second. This is on a daily basis, so basically the same thing again. You are getting the stochastics to come back down, but the MACD overall is pointing lower. Here's the world one. Okay, so the Dow, and this is the world here. It's treated as like a head and shoulders. This is a weekly chart, so shoulder, head, shoulder, broke on down. I pointed Andrew's pitchfork this away. All right. Basically, just an area where prices will basically trade. Just straight lines, the whole deal about your linear algebra deal. Just straight old lines, time and price. And I believe these are logged. Yeah, they look locked too. So same thing, a larger sideways channel, except for the fact that this one was lower, so the bias is down at best. For bulls, it's sideways. Crossover, rolling down, that kind of thing, failed to make a new high. So in theory, if it fails, if it fails to continue to go higher, it's going to go lower, and one assumes that this isn't going to hold and this isn't going to hold. So we're back down to these levels. For the world, it loses a third, right? This is fluid, aqueducts, whatever. The water rushes, lands, you name it, however you want to look at this. It's arching and rolling over, okay, which is fine. Hey, I'm looking for a deal. I still have years and years and decades in front of me. So I am looking for a deal. Coming down doesn't bother me any. Here we go for the Dow Jones Industrial Average. Okay, what I just did is I sloppily just drew some highlights on here. The pivot once again, right across through here. And, the pivots, these help you for targets. That's the first thing here. It's just a target. Besides your support and resistance, it just gives you targets. So the pivot comes through here. If the price closes below pivot, in theory, it lost its momentum and it rolls on over until we find value and want back in. Same thing on the other side. We don't know. All-time highs, right? We don't know. Well, this just gives you a target. Self-fulfilling, sure, we'll go along with that. But all I know is that right here it hit R1 and stopped. Yay, computers. Works with me. I mean, if I can get into 99.37% of, I'm happy camper, right? In theory, though, you're only supposed at best to get the bell curve, but with options and other things. Down here on the moving average, here we are. This may have helped me, the moving average, and at 1800 to be interested in buying on the S&P and stuff. But for right now, I don't like any of this. So my bias is lower here. I put down 25%. Now remember, before the crash, we dropped 20%, and then we dropped 25%. So I'm not saying we're going to crash like or lose half like 1987, but that's the type of discounting I'm looking for. It doesn't make any difference what it is. Like the computers kick in, it's all over with. We've seen it. I mean, we now have limits in equities. That's how futures trade. So what's wrong there? Either the leverage, or the price. Limits on equities. Well, okay, it's a start. It causes moment for pause and to reflect. Why did I do that? All right, so like I said, some sort of bounce once again in equities. I'll take anything and then reevaluate on the short side of things. But basically, I look at it as the Dow tried to break out, didn't do it. It's taking a lot longer than I'd like to see for it to come back down. Even if it stalls at the 50%, remember this is a long multi-year we're working on sideways pattern. Energy stored up, you betcha. Energy stored up, we've, you know, housing takes off or something or another just kicks in for where we're at. All right, so... But for me, I don't like the setup. It's sideways. It's defensive. Is how I look at it. Opportunity to get some, to the downside. Hey, I'm more for it. I mean, your volatility, they went to really low. So once again, tried to break out on the upside, didn't hold it. It's back into the larger sideways channel here. You can use the pivot, the S1 and the R1 for basically lazy way of that. If it loses pivot and stuff, this is on a weekly, the computers are going to start kicking in here. This is just would be a classic tipping point type deal, right? I mean, everything's fluid. We're bringing the new people in every quarter into the future side of things. They have to I mean, this can be painful for some people, and we will definitely see that after this year. Yes, there's going to be just a few issues out there, I think, which is fine. Get them to actually do their job. It's only a coin flip, right? If you're wrong, controlling your losses, risk management is the key to all of this. That one trade out of 100 that you hold on for too long, that's what does it to most people. So the rollover here, anything on the bounce would be willing to short, next couple of days reevaluate. The pivots down here, sideways is how I look at it. These have rolled over though. So the bias to me is sideways to down with a couple of days of a bounce. Early in the week, mid caps double top here. Same type deal at best. Maybe we have a multi-year. Whoops, this one starts back a little bit further. 14, 15, 16. 17, now it's a whole bunch of that. Okay, so mid caps, I'd be interested in buying on any type of swoon. What's this, 1,500 to 1,000, 1,500 to 12, 10, 20, 30, that kind of deal. Any type of, pretty nice move here. Poked its head out. Came back in, susceptible. That's what I'm talking, folks. It's just some sort of swoon, and then you're back to here's 2012. So now you're talking 5-year low in equities. Well, statistically buying 5-year low, does that work out versus percentage of 20%? 33, 50, 75, 67, that kind of thing. And it would be. And that's why I like the features. You just have to click and you're in kind of thing. You don't have to try and look through it. I'm not in any position to actually have to control that much capital and manage it. Where I also have my USA. Well, let me take a look at your company. What do you make? Just give them the capital. All right. Okay, so basically double top here, but the bias is into the channel. The best I can say for the bulls, anything on the upside, I'd be looking to, the short side of things. Now these things are becoming a little more ominous. NASDAQ 100 poked its head through. Any way you slice this type patterns, the time, even if you look at other things like money flow and that, it's all of it's in there. It needs a glass of water. Something fierce here, so I have to, any bounce, even if you have a small shoulder head and another shoulder, any bounce here, relief rally, you will see it. That would be my ideal situation. Wednesday, they're just yeehaw, whatever, start talking about the holiday shopping season. That's fine too. Well, what would happen there? Interest rates, you know, it'd be a little too obvious there. That's why they're hiding out interest rates too. But if we seem a little too giddy, we can see it in weekly retail sales. They can see it in per millisecond. Your Amazons and that, right? I mean, you know, big. It's like Netflix. You know, what's going on with the cloud? You know, our stock exchanges aren't in the cloud, are they? I couldn't log on. You know, that kind of deal. We're getting stretched here on just Netflix. I had Netflix issues. I tried to watch some stuff on World War One. I'm like, what? All right, so NASDAQ 100 here, like, you know, rolling over whatever on this trend line. This one is most important here, S1. We're down to the 4,000 mark. We discussed that last weekend, I believe, on the 4,000. And then here's down here, S2. Like I said, you know, if you go from one extreme, you can just fall to the next extreme. So that's how I'm looking at it. Yes, we haven't gone anywhere. Yes, I've been mentioning this since July, you know, but the deal is, you know, this is a lot of distribution going on here. And between all of us, wouldn't we all like to buy down here, right? For some other people that are like, short a contract, short, you know, match up your portfolio. I'd rather give up dividend. Okay, yeah, sideways action, right? Not too much in the capital gains, not too much, you know, maybe you'll get some in, this is NASDAQ, but some sort of dividend. You know, whatever, lie to yourself, you know. That's in theory what it is the narrower in this, you know exactly where your stops are going to be. This, you're in this channel. If it breaks out to the upside, you take it. You know, if it goes to the downside, you know, get out your shopping list and your shopping carts and figure out what you want to buy. I've been talking about this for a while here. So it's just, you know, we're watching. All right, this one here, the NASDAQ and the composite, NASDAQ 100 and the composite. This tells me if the whole NAS or one segment of the NAS is popular. Down here at the 1314, that would be the non-large cap, the 100. They were more popular. Well, those were the cheaper ones after the move off of 2011. You had to find cheap. All right, this up here, 2016, 2015, this tells me that the 100 was popular. Okay, well, let's just pick a date in 2015. We'll say this is Apple's earning and the last time it saw 134. Okay. Amazon earnings, Amazon and Facebook earnings, you know, that kind of thing. Same thing, here we are again. We're back into, I guess the pivots could be used here too for the price swings. Actually pause here. Like I said, I also use previous lines too, right? Especially some on a chart like this. You know, just draw the line across. Here we are banging on here. So the 100 is one that's most susceptible in general. And the little guy, you move out of it. You sell an $800 stock and you buy an $8 stock. That's basically kind of how you look at it. Have fun doing your scans and matching those ones up, right? This is, I think, the same type of deal. What do we have? Weekly? Or were you weekly too? Duplicates. Grr. Thought we solved that problem. I guess not. All right, next page. All right, New York Stock Exchange Composite. Wow, is this the high? You betcha. On next 2015, same thing, possible head and shoulders type deal. This whole pattern, week. Whatever cross. This is a weekly, right? It's a cross, whatever. Tell me about the crossover. Okay, don't like it, right? A 3 pattern off of here. I think I marked it as, you know, ABC. All right. Same thing. If we get a decline, all right, this should be precipitous. This would be your wave 3 lower, right? 1, 2, and then a hard slide. Just like we saw in 1968. It just that's it. You know, keeps on going until it's 40% off. And this morning we saw stuff that was 30% off. So, you know, all of a sudden you begin to go, hey, I want to buy this, that, you know, some sort of stock that's at a 2011, 2012, 2013 area that may benefit from future economic activity. All right, the pause here works too. All right, we'll throw this in on the mix of fun and games. I actually have to say something nice about this index now. Little squiggly lines that people focus on. Here's a 50 and a 200. I like the 40 because that's how I started. But now I found if you put a 40 and a 50 moving average, you just kind of focus on nibbling in between the two lines. Like over in here. Try and buy in this area. Buy in this area. Oh, we're above it. Oh, we better hold it. This thing that's lost its momentum, and this one's just your crappy trend line, right? So this should, at best, this would be your retest here. This is your pivot for this year. This is pivot for next year. Lower pivot. Well, that's good for the bulls. Huh? You have a little more hope now. You know, to me though, it's here we go, 2011, right? So the pivot line, pivot line, pivot line, pivot line, pivot line. We broke below it in 15. We went back and hit it. Then we went down to the S1. And actually it was S2, so it missed it by a couple of weeks, 2-3 weeks of zapping S2 of the previous year, okay? So, and then went up to this year's pivot, hits the previous year's pivot and tried again and basically hit the top of the 50 period moving average. What's 50 period moving average? And then rolled back over, okay? So now if there's any continuation lower, it's going to be precipitous. It's going to be at a sharp angle. It's going to be quick about it because I have to believe that the computers, and remember, you give your money to a mutual fund guy, okay, unless it's actively massive. Oh, yes, it is definitely actively massive. Oh, where's the cover charge today? All right, actively managed. It's passive and it just sits there. So unless the pain hits somebody, and they pick up the phone or click the thing and say, they're in it until they make the bottom, right? I mean, if it's just sitting there and, you know, they can attempt to do what they can do to help out the situation. But basically it's in stone. What are these mutual funds are going to do, you know, until you get in and you get out. They just help you just move numbers around, really. Okay, so New York Stock Exchange, like I said, one more time, I think this is like a 1-2. We're on our way to the third wave lower. It should be precipitous decline. That's how I stand here. The issue, I believe, will be a stronger dollar. Remember, 95% of the world is over there. Conglomerates, smokestacks, you name it, however you want to slice it. You know, what do you charge for fertilizer when corn's at $2? That kind of deal. So everything is relative. OEX, we do on a 2-hour. These are 2-hour, so we're, you know, sideways chop, sideways chop, sideways chop. This is a little, you know, 1 week. This, you can see the angle of descent here isn't your 45-degree angle type deal. You know, things are beginning to pick up a little bit here. We do on the 2-hour. We do have for the MACD and whatever oversold. Doesn't mean it can't run sideways for another week. Sideways, just get buried, right? The 2-hour doesn't work because we're all trading weeklies and monthlies. All right, levels down here. There isn't anything here, but I'd use previous back for the OEX. But like I said, I'm all in shorting a bounce here versus loading up something fierce on the long side, looking for something that's not so risky. Okay. I mean, I'm looking at stuff to buy here, but the stuff I want to buy needs to be beat up a little bit more because I'm looking at the greater cycle here of real estate. All right, so the OEX, and that's a weekly is basically the same thing as the others, just anything the market gives you to the upside. I like the downside. Here you have weekly, we have double hook here. Those are rare, okay. We already had what I would call the slingshot or catapult, or what do I call it? I'm going to pull back a rubber band. Get the same shot here. Spring, swing, whatever you want to call it. We had a pretty decent move from here to here, and this is all we got. Okay, and so now we're rolling over on ourselves. There's not, you know, there's going to be buyers down here because there has to be somebody on the other side. You leave it enough between the futures and the cash, someone will catch it. So you're bound to find. It's a computer. I don't know what its name is, but it's going to do some buying. You know, whatever. I'm interested in buying. You know, so that's how I kind of look at it. You know, back into the sideways channel. I multi-years here. I have to believe that this is distribution. I think we're going to slide hard. Anything, any couple of two, you know, did we get anything, you know, above Friday's highs? And I'd be going, okay, I'd be interested in selling, because I'm not really interested in whatever swing might be left here for now, because you're going to, no matter what, however we slice this going forward, we will see a recession. And just Mother Nature comes in and the economy slows down, but then we have inflation in commodities. We'll just say that. You know, Russell, the thousands here. Okay, so this is where I'd be looking here to buy any type of growth type thing looking forward. You know, but we will have a demographic change, right? From the baby boomers to younger generations. They have different needs and wants, both sides, blah, blah, blah. But that's what I'd be looking to get into. You'll see it in the charts, and there'll be ample amount of time for you to do your research if I'm right and this thing falls apart. The 1,000, you can go through all of these individually. Hey, hallelujah. You know, scan for an index and go running through it. I guess I like to do the Dow 30 because it's quick, even though I just got done saying that's one index I don't like. But then again, Kev, you know the S&P, right? Yeah. So let's learn something else. I always tell everybody to find one thing and love it. You know this thing. You know, learn it, live it. That is you. And the S&P is probably the best one overall. Then it brings me back to you have 4 indexes going up from the beginning of the year. Do you buy the Dow? Do you buy the Russell? Do you buy the NASDAQ? Do you buy the S&P? Even though you have the trend right, you might be in the wrong vehicle. So that's another thing to scan for too. Remember the best mutual or hedge fund guy doing single digits a month, right? Okay, now we have access to options and futures, but you have to have a plan first of what you want. You know, if you take 40% on an option, you know, it makes, you buy it at a dime and you sell it at 14 cents, but 3 cents of that 4 cents profit is commission. So you have to have a plan, right? If you trade the S&P futures and you put in a $200 stop kind of thing and you just bang away there, you have no bias. It's fluid. You look at some sort of indicators, you know, whatever's telling you that, you know, the lines everywhere. This is a line up, it breaks. Now we work on a line down. You know, it's the stuff is fluid. I mean, if you look at this whole big thing, there's been only a couple of moves here. Basically, you had the peak in at the beginning of 2014. You had your first drop of a longer run from 11, so that was 3 years. You had a drop. You had an attempted new high. It got to the new high, but the indicators failed to make new highs. So it used a lot of gasoline to get its further away to bad results. All right, and then it came down here. Hard buy, right? I mean, you're dropping from 2134 to 1800. I came in, we got this, and so here we are, and I don't want any of it. You know, and it's okay. Well, now what happens if we slide down here? You know, that's Russell 2000. You know what I'm saying? You know, look at those S2s here on a weekly. you'd be shocked. Go look at an option. You know, I mean, it's, you know, small cap, same thing. Any type of hard pullback, I would be interested in. I don't think this is a bear market in the making where we actually start sliding now and it goes on for 18 months. I think it'll start in 18 months, you know, kind of deal, and then do it that way. We still have the economy basically going in the same direction. We can always adjust it for what have you. You can always find it's there. If we can't do it in the private sector, we do it in the public sector, that kind of thing. Contracts are here. Money is beginning to flow in. You know, we're spending. We're trying to find stuff to do. You know, we can't finish the other jobs in town, but we're trying to find new stuff, new projects, things to linger on. All right, S&P 500, same thing. Tried to break out to the upside on just an alpha pattern. 5 ways is an impulse. This isn't even close to an impulse. Multi-years of sideways. It's going to be distribution or accumulation. At best, this is going to be a pause. You know, it stalls somewhere in here and it grunts higher. Well, 2250, 2400. That's fine. Trust me on this one here. You know, it decides to do that, that's fine too. I'm not going to stand in the way of shorting it. I mean, if it clears the high, you have to take it because it's just a mechanical thing. Yeah, okay, whatever. It still doesn't mean, though, it doesn't go up to like I said, right? 2200, 2400 for this year, right down here. Who thinks we're going to see 2400? Ta-da! Well, here we are, and I don't like it. All right, so if it goes up there, well, that was my original plan, you know. But it doesn't mean that I can't participate, right? We're gonna have rollover, you know. So hey, whatever. I suppose you could say I make a bad call where I wanted it to be somewhere down here, okay, so I can buy. If it gives me something up here, yeah, I had it. It's kind of like the gold. Yeah, I had it for 80% of it or whatever, but I didn't like it. You know, there's a plan here. I skipped the mechanics and went, oh, I don't like it. Have them rolling over here too on a weekly. Just draw a trend line underneath here. Basically, just kind of a retest of the underside of the trend line here, and it lost it. That's it's, you know, vertical, or we have a trend line here, but horizontal. You know, here are the pivots, here are certain things, the moving averages. Put whatever, you know, 400 moving averages you want on your screen, and it's just mechanically gonna get beamed if it continues lower, and it will pick up steam because you'll have people like me who just want to club this thing because it's worth clubbing. You know, it has nothing to do about whom I'm voting for or whatever. It's just this market is susceptible to good old-fashioned clubbing. You know, that's what I'd like to see. I'd like to buy it when it's an opportunity to me. I don't have to come up with any reason. Oh, I would like to buy low so I could sell high in 20 years, 30 years, or not at all. Perpetual trust just keeps on going and going and going. All right. But that's how I'm looking at it. We're back into here the next couple of days. We're going to see if we can actually work off anything economically into the holiday season. Whatever excuses, it's just be on your toes here. Anything that continues lower, this thing is just going to pick up steam. It's going to precipitate. That's how they all look, right? Here's the transports. Liked these last year. Not much of a bounce out of it at all, right? Now we're stalling here and pivot. Can't find any grunt. You know, it's going to need some grunt here. I would say watch the transport here and break out to the upside, and also shipping. Shipping's been beat up pretty good too. If anything's going to it'll pick up here. Oh, I posted something from Zero Hedge on truck sales. That's fine. I'm passing along. But it's great that now we're making a big stink of it. What did it say? 20 months a year, you know, or whatever, year over year. It's it's a long period. It's kind of like me talking about the short side of the market if it should continue lower. I've been saying that for a while here. And so it's not going to be news to a lot of you. But on here on the transports, I would personally watch because if I liked them last year, them not going anywhere, you know, at anything economically, if we're going to have the housing boom, they're going to have to move the lumber and this and that, and here, there, and everywhere. So I would venture into the transports, okay, and shipping to watch, you know, for economic going forward here, you know. I don't see it happening with oil in that, but you know, 90% of goods goes by ship at some point. So if anything's going to show up there, it's going to show up there, right? So the transports, watch them on the upside. Anything on the downside, if they give it to you, well, it's just some obvious places to buy into, right? If we're going to have trucks on their own, we'll skip the labor part. That's a chunk, right? You know, labor is expensive as the hotel rooms, right? I don't know. Toronto Stock Exchange, this basically, to me, this looks like a bounce after, you know, a hard sell-off. Look at, this is 2011. So Canada, they went back there to the 2011. Yes, their economy is geared towards the commodity cycle, and here's where we're at. So we're back up here again. Is that it for the commodity cycle? I am going to have to guess so, or the bounce, pricing-wise. You know, I think it's outside of maybe wheat and meats. You know, I just think everything's going to get you know, it's going to roll over again, and it should pull this with. At best, it's back into the channel. Once it's, you know, theory here is if this is the channel, it went down to here. If it does go higher, it should go within equidistance of the same thing. So it would go up to S2, which would go along with America going up to 22 R1, 2250 on the S&P and 2400. Like I said, I'm not interested in that last 10% because I didn't like what we have here. Down the road, hey, I'm looking for. I just rounded it up to 5,000 on the S&P. All that is a double over the next decade, we'll say. Has it happened in the past? Go look it up. Have some sort of plan. Stan, entertain yourself. Utilities, okay, weekly, right? Yes. So utilities, the little invisible line, it held it. This to me looks like more like a bear flag. Remember that the utilities, there was a hard move up because of lack of return out there. Higher interest rates. There's going to be some competition here, so I'd expect it to go lower. Though, with that economic activity, they should bring in more in revenues here. But when my bill has 13 lines of fees and taxes, think of it this way. It costs me more for them to send me the bill, okay, customer service charge, right off the top. Even if I pay them ahead of time and tell them I don't want it. Nope. All right. Then what I use. Okay, so obviously economic activity goes, that'll be it, but the utility company, they're going to have to be a little more creative here. Just due to the fact, however you want to slice it. I mentioned that I thought maybe the utilities were at a multi-generational high. Okay. I mean, literally, what do we continue to do? We pull out the Enrons, and we'll just say Chesapeake's and other under $10, you know, beat up utilities and stuff, and put in the new ones. So we basically just change the names. You know, it's not like we're tearing out. Oh, we're going to tear out Con Ed's and lines and bring in this company's lines. So it's, you know, there's that kind of farce going on behind the scenes. You know, General Motors goes broke, you put General Motors back into an index. Okay, you know. But utilities here, like I said, this could be all-time high. This is it, fact check. And just, I mean, can you imagine that in utilities? Well, you can't, but whatever reason, hey, Elon Musk, whatever, you know, I don't know. I haven't taken physics yet. Wilshire total market again, same deal, double top, basically rolling over at best for the bulls, sideways channel. That's how I look at that. Here it is again with some lines. It's basically the same thing, just some lines, whatever targets you hit at. Here's pivot S1, S2. You can see is if you can get this, the hard slide here. If it busts through here, it's not much. You know what I'm saying? You know, bust through here, you buy some calls, you have to roll over whatever into marches and you go long. Those would be your targets. Okay, this is fluid. You know, down here, basically, I have the Wilshire divided by the VIX. So as VIX goes higher, it's the divisible divisor by the Wilshire here. All this is just giving me little dots of times when VIX spiked and the Wilshire came down. I'm just kind of eyeballing it. Here's where we're at here. So we have a single here, you know, your outlier type deals, but this is basically the center of any of the pullbacks. This was Brexit. Here's where we're at now. This is the December low in this year, and this is the Chinese devaluation. So it's Chinese devaluation. This is the first interest rate hike, December. Interest rate. Oh yeah, you remember that interest rate hike. The fallback, the swing. You know, there you go. The swing up in here, and then rolled over. As you can see, even if you take the VIX down to lows and you make new highs. And then it just didn't have its little oomph here. Here you have 3 highs over 8 years going on, or 6 years, I guess 6, 7 years going on it that way. You know, boom, boom, boom. Here's the lines. You know, it's above the line, at the line. It's basically an island here. You know, over the summer, hey, short, short, short. Now we're trading below it, below pivot. How many times? Follow this back, pivots again, cracking over it at 11. There you go. So just little oddball things here. I mean, in theory, it really doesn't make any difference because this thing, the Wilshire's going to continue in 20 years. Where is this going to look? But it just gives me an idea from the 2011 low and where we're at for just the price of the index and your VIX. All right. Amex, basically a large sideways pattern because of the peak in the mining and drilling, and that the Amex usually houses those type of equities. Sideways, I'll pass. At best, it's still headed lower. And that's the end of that. And I'll let everybody go for right now. And I'll do another video. Have yourself a wonderful afternoon.